I sincerely meant what I said is, I think those first two inputs is going to take me some time to absorb. And perhaps we can pick up the conversations on LinkedIn or other places further. Because it certainly, it's almost like people take too narrow a view, and we're going to hear quite a bit of that today. So it's going to be fantastic to be in this metal or mineral, and the prices are going to go up. But if the prices have come down in the last year and it's not going to go up in the next 3 years, internalizing that for what does it mean for your company ultimately, but for us as an industry, I think that's going to be very interesting conversations. I shared with you, I spent Friday in the South African process starting to have a roadmap for battery minerals or whatever it's called, and we aren't even yet acknowledging where the world is today. And so I think there are so many places where that sort of data set of this morning, and it's a view, but where that should be put into so that we come up with the right, ultimately, tactics for you as a junior miner, but also for us as an industry. And when we then engage with government or other entities about what should we do, how do we play to our strengths, I think that will make for very, very interesting conversations. I earlier told you that we had a withdrawal. I think this was because they heard that Peter Major was going to critique them. So Helium 1 withdrew. But then I had a very kind offer from Yuri Wessels of Vanadium Resources to stand in. And so we'll gladly accommodate that. So we're going to have a replacement presentation in the place of the one that unfortunately cancelled on us at short notice. And you see, I am maturing. When Gwede cancelled on me at the Joburg Indaba, I was not as well behaved. I expressed my views. I used words like arrogance and all sorts of things that got me into deep trouble. But here I am, much more polite now. And when people cancel on me, I say, oops, they cancelled on me. See, I am growing, slowly growing. But that shouldn't stop me from having fun with the next bunch of people. Some wild people, yeah. I once said to Boris, he will disown the story, but I said to him, Boris, people don't actually want to hear how rough it is in your war zone where you are building a world-class tin mine. He's no longer with that tin mine. So let's hear the next round of war stories from Boris. Boris, over to you. That timer is real. After 10 minutes, the floor opens, you disappear, I take over. Okay, so leave some time for questions as well. Welcome back, Boris.
Thank you, Bernard. Yeah, fortunately, the jurisdiction that I moved into now is very boring from a war story perspective. There's a railway 50 meters from our office, power lines overhead, tar roads, and an airport. People have been singing Namibia's praises. Botswana is certainly right up there next to them. 1 in 3,000 mineral discoveries become a mine. And that's according to Rick Rule, who's been in this business for most of his investing life. Of those, only 35% survive beyond their first 5 years. That puts your odds at 1 in 10,000 once you have a mineral discovery. It's not even going into the exploration side. So how do we mitigate those risks? Increasingly, one of the strategies that are being rolled out, as we've seen with Errol Smart's Orion, with Anthony Fillions, Andrada, and Jan Nelson at Copper 360, is we're looking beyond the heuristics of brownfield operations that have been mothballed. Bernard, heuristic, as defined by Daniel Kahneman, is a mental shotgun by which you generate simple, easy answers for difficult questions.
Thank you. Jeez, Oxford straight, huh?
So we need to go and check what are the heuristics surrounding these particular projects. Are they still valid, or were they ever valid? And Premier Nickel is one of these projects. Our usual cautionary, as Bernard succinctly once said, it basically says we won't knowingly lie to you, and if we do, our lawyers say we're absolved of all guilt. So, in summary, Premier Nickel took a look at the old BCL. Selebi-Phikwe was well known as a copper nickel producer for many years, up until 2016, when it went into liquidation. Now, the reason it went into liquidation and was closed down, normally mines are closed if they run out of ore. Selebi-Phikwe was closed because the smelter broke down. It was their only means to monetize the ore. So once the smelter went down, they put about $150 million into it to try and restart it. That failed. They pulled the plug on the entire operation. And literally pulled the plug. It's quite bizarre. You can go underground, and there are almost coffee cups sitting on the table. As the shift went out, they locked the gates. So we believe that not only are the SAMREC compliant resources still there, so there's still plenty of life to come, it is our hypothesis that the best is yet to come. Bernard, it seems your clicker. So initially, BCL, they tried to market it as a complete lock, stock, and barrel. You had to take everything. That process went no bid. Post the process, we went to them and said, look, we believe that we can make a go out of some of the select assets within the BCL portfolio. And two of the key assets were the Selebi North and the Selebi Mine, two shafts that have been producing historically, have measured resources, and can be put into operation very quickly. Selebi North shaft, the newer of the two, probably the far better placed shaft. Selebi shaft number 2, if ever there was a textbook case for putting a shaft in the wrong place, that's it. But together they produced about 1.5 million tons per annum historically. They're both relatively dry, extraordinarily competent rock, so very little support work required, and historically were seen as two independent mineralized zones. Our hypothesis is that that is wrong. Our view is that they are both either end of one mineralized zone. And that's all well and fine. If you look at the historic grades and the widths that were being mined by BCL, you can kind of say, well, so what? Here's so what. BCL drilled a hole SD119. Typically, they were getting intersects of about 2 to 4 meters, amphibolite-hosted mineralization. This hole kicked out almost 40 meters of massive nickel sulphide. Now, why is this exciting? Nickel sulfides are incredibly rare. Good, high-grade, high-volume ones, even more so. Something else happened. They also did borehole electromagnetics. Now, this is something new to me, and it is extraordinary. It's like a radar. You can see what's in the ground under you in terms of conductive plates. And the only thing that's conductive in our environment are the nickel sulfides. The original work that was done on hole 140 had it, the survey put it in the wrong place. We connected it, and the two sit one on top of another. So we've got a highly conductive plate, and we've got a 40-meter nickel sulfide intersect. So we had to test our hypothesis, and our first hole was aimed at the middle of that plate. And if any of you are looking for nickel sulfides, this is what you want to see. We hit 26 meters, more or less, of high-grade nickel sulfide. So one of the things that is great when you take over a brownfields resource sometimes is that a lot of work has been done, and some of it you can repurpose to suit your program. And here, all those green dots were drill holes that BCL had done in the past. What that allowed us to do was to clean out those boreholes and to do borehole electromagnetics of the entire property to see, was that one plate an anomaly, or does our hypothesis that this is one mineralized zone potentially stand true? And every time we put that probe down and fired up the loop on the ground, the place lit up like a Christmas tree. We got targets coming out of our ears. We spent 15,000 meters of drilling last year, aiming at most of these. The bulk of the intersects corroborate the thesis, albeit we really need to understand the structure a lot better, so we need a lot more closer drilling, closely spaced drilling. Our thesis is that the whole Phikwe Selebi area is one mineralized zone on multiple mineable horizons. And we're going to spend this year confirming that and getting better insight into the parameters of the ore body and the economic aspects related to building a mine against them. What we found, these things are deep, and people say, whoa, 1,200 meters, that's really deep. Well, we're actually only 100 meters away underground from that target zone. There's all this infrastructure available for us. So not only does it give us a very cost-effective way of restarting an operation, it dramatically shortens our timeline. And in this space, I don't have to tell any of you, time really is money. So that is an enormous head start we get. There's another factor. The mine planner we have planned these mines from the start. He knows every corner, every cranny, where there is waters coming out, where there's potential bad ground, where the high grades are. It's absolutely magnificent. So the one issue with depth is beyond 800 meters, steel this big suddenly becomes like wet spaghetti, and it diverts to everywhere but where you want it. It is incredibly difficult to hit defined targets at depth. So we're going to fix that. We're putting in some drill bays underground. We're going to start at Selebi North. That's closest to us. It's easily accessible. And we've got 3 bays on the ramp. We've got another 6 bays on a drive at 810 level. And the geologists will be a lot closer to both the SAMRAC compliant resource, which we now have to move into 43101, and then to hit the conductive plates, which are those in light blue. Once the development team has got that done, they will continue going south from Selebi North, and that will put the geos within reach of the main ore body between the two. To give you some perspective on size, the distance between the Selebi North shaft and the Selebi shaft is about 6 kilometers. That's from here to Sandton City. The unmined mineralized zone we estimate to be about 3 kilometers. That's from here to probably Rosebank. This is a sizable, very large ore body that we believe has far better prospects than what was mined. And why do we say that? Along the western down dip section, something happened. Either there was a fold or a fault. We're not too sure just yet. But it remobilized all the sulphides that were in the amphibolites further up into a thick, massive nickel sulfide zone. So we've demonstrated that it's continuous. We're busy doing additional work to get that structure right. We've done met tests. We can produce concentrates that work. And we also have another project up near Francistown, which is very different, much bigger, slightly lower grade open cast operation that we will also be looking at in the near future. Again, met tests give us a positive product to a nickel concentrate and a copper concentrate that we can sell.
Thank you, Boris. Thank you very much. I'm waiting for applause. You know, I mean, I'm not going to carry on here.
See, I need more stories.
Really a few quick questions. Is this a pure nickel play now and not a copper opportunity anymore?
Bernard, both products come out. So I suppose it depends how you want to market it. The bulk of our volume, and certainly the bulk of our revenue, will be nickel. But we do have a large quantity of copper coming out. We've got cobalt And from the Selkirk operation, we've got PGMs and a bit of gold.
But your name says you are positioning yourself as a premium nickel
Yes, we
resource
are.
now. Yeah. Sorry, man, I should stand up out of pure respect then. Jeez. There was a question. What is the main reason your share price has fallen so far last year?
I think the reason are a number of faults. Firstly, we listed exactly as Russia went over the Ukrainian border, which does not make for risk appetite in the markets. And we've had a couple of missteps in terms of our financing from then to date. We think we're close to getting a solution in place, and I certainly look forward to it improving in that I put the bulk of my money in at listing price, so I'm somewhat underwater at the moment.
You are really trickling the interest of this audience, so, and you didn't give me any time for questions. So there are lots of questions. Given they drilled hole 119,
your attention please.
And now, Bernard?
I don't know. I'm standing here looking for that nearest door to me. And once I'm outside, like a good Greek captain, I will coordinate efforts from safe shores. I know Stuart has gone to check up. On that high note, I'm going to let you off and going to ask.
Thank you.
No, we can't afford to lose you here in the fire. So you go off in the meantime. Who we can afford to lose is Jason. So we'll ask him. We'll ask Jason to come up in the meantime. Boris, sorry for that. Perhaps we could have sneaked in, but there are lots of detailed questions which you'll see on the platform. Now you've only got 12 minutes left.
12 now. Okay.
Aren't you a bloody Aussie? So I mean, 10 minutes if you say anything more cheeky, eh?
Good afternoon. Good morning, everybody. Good afternoon if you're back in Australia. I'm Jason Brewer, the CEO of Marula Mining, a junior company headquartered in Nairobi and very much focused on the battery metal space here in Africa. Is Africa ready to electrify the world? And how, as a junior company, can we be part of that, drive it, and so on? Bernard?
No, it's not me, eh?
Okay.
Yeah, patience.
Thank you. Yesterday, I think there was a fair bit of discussion on battery metals and the demand, the supply, the pricing mechanisms, and so on. In the world that we now live in, and the world that we're probably going to be living in for the next, well, certainly for our lifetimes here, let's be realistic. Tremendous growth, tremendous demand for the commodities which we have here in Africa, and which for a large part have really not been developed. Political reasons, investment reasons, and so on. But there is a clear demand for these commodities. And through Marula Mining, we want to be able to tap into these. We want to tap into these by redeveloping, recommissioning, and starting up brownfield operations throughout Africa. A big focus here in South Africa, where we actually have an operating mine at the moment, which we got up and going basically within 3 to 6 months, and which we've made significant investment in over the past, well, certainly this year. But we're also very much focused up in East Africa, where we have a series of other projects, which again are focused on that on graphite, on copper, and lithium as well. We talked about this again yesterday. So many opportunities. Okay, the reality is when we start exploring for these commodities, we find them. You know, there has not been that broad exploration for many of these commodities here, particularly throughout East Africa and even here in South Africa. You know, you've got, I think, Bernard, there's some 6,000 closed mines here in South Africa, many of which in today's environment could get restarted, could produce significant earnings, job employment opportunities to the country here. If South Africa's mining sector was back in Australia, most of your mines here would have been reworked half a dozen times by the Australian junior mining sector. That's a fact. You see this every day in Australia. Why isn't it happening here? Not just in South Africa, but elsewhere. Look, I'm a big proponent of Africa. I've spent the past 25 years working here in South Africa, Zambia, Kenya, Tanzania, and there is tremendous opportunities. And I think now more than any is a tremendous opportunity to take advantage of the environment we find ourselves in. We're looking at some of the other major mining sectors, countries in the world, South America in particular, where the political risk associated with many of their operations is now bringing people here. You know, you've just seen DRC is going to move up the rankings in terms of being one of the major, I think the second largest now, copper producer in the world, overtaking Peru. A lot of the mines, the nationalization which has taken place throughout South America, the push by governments there creates the platform for us here now in Africa to start developing some of these projects. We've seen it in Zimbabwe, some massive investment there in the lithium sector, and George is going to be talking about this after me here. You know, this is an opportunity where we can now push forward very quickly. Marula Mining, how can we do it? How have we done it? We've got one mine in production in the past 6 months. We've got another one which we're going to be producing our first high-grade copper concentrate out by September of this year. And hopefully by the end of this year as well, we'll be producing graphite out of Tanzania. You know, a very aggressive, dynamic junior mining company. And that's what junior mining companies are about. It's about being agile, taking advantage of market opportunities, seizing the initiative, and moving quicker than some of the dinosaurs which we've seen dominate Africa's mining sector for many years. I think, Patricia, you're going to like this slide. Marula Mining, it's been listed. It was a shell company 12 months ago. The share price, the market capitalization has gone up 15 times in the past 6 months. It's at the moment, it's roughly about 300 million rand. I'll quote in rand because that's probably going to increase tomorrow by another 20, 25%. Okay? We're in the process of moving on to the AIM. Part of our migration onto the AIM exchange, we've got all our consultants are based here out of South Africa. MSA are doing our competent persons report. They've been to Tanzania, they've been to our operation here in South Africa, and they're heading up to Zambia, I think on the 17th of this month. Our legal work is done by ENS. Thanks for the sponsorship here, guys. They're completing all that work. So we're very much looking at building our presence here. In conjunction with the AIM listing, we are going to be an additional listing here on the JSE. We're in the process of appointing our advisors, and Copper 360, you've done a fantastic job, and we'll see how we progress. But we're very much focused on making sure we are an African-focused company. Whilst listed in London, to be honest, guys, it's a postbox for us. Our whole operating administrative team is based out of Nairobi. We have an office in Kimberley. We have an office up in Dar es Salaam. And we have literally just there in Sandton, we have our major shareholder and our funding partner in place, which is critical for us. And one of the big reasons about being here and coming here on the JSE is we did a transaction earlier this year with Quinton van der Berg, who probably best known obviously from the coal mining sector. He's diversifying into the metals, the hard rock, and certainly into battery metals. He's coming on. Q Global Commodities are going to be taking a 51% interest in us. Quinton is going to be taking his first seat, I believe, on a listed company. And they're investing, I'm trying to work out the numbers here in rand terms. A lot. Basically, he funds us through all our projects, both the project here in South Africa, the 3 projects in Tanzania, and the ones we're going to be announcing duly in Zimbabwe and Kenya. So, Patricia, we'll be working very closely with your team to make sure we add to those 11 junior mining companies that you supposedly have on the exchange.
12, you're going to be number
12.
13. Sorry.
13. That's a bit unlucky for some. We'll see, okay? We've talked about a bit of this. London listed. We're operating in our backyard. We're not another Perth-based, Sydney-based, Vancouver-based, and no disrespect to anybody in the audience here. We're working in our backyard, which means we have to work in a very different way. Okay? We're working with communities that, again, we live with. And that brings on additional responsibilities. In the space of 6 months, we've grown our workforce from 3 to just over 100 people here in the Northern Cape and up in Tanzania. So we're moving very quickly. And certainly by the end of the year, we're probably going to be about 250 to 300. Okay? So we've got a lot of responsibilities there, particularly as we look to grow our business. Okay, just to give you some specifics on what we're doing, guys. In the Northern Cape here, the Blesberg Lithium mine, a lot of tantalum associated with that. A former operation, operated intermittently for over 80 years. We've gone in there, there's about 250,000 to 400,000 tons of waste stockpile. This was a small operation which was mined primarily for its tantalite. Within that pegmatite, very high grade spodumene, lithium. We've done multiple bulk samples there. It's running between 5 to 8% Li2O. Typically what you export as a spodumene concentrate. So we started reprocessing those dumps in November. We secured a prepayment through a Swiss-based trading group for $5 million, rand terms, a lot. That allowed us to completely buy out all the minority shareholders and fund the initial development there. Just last month, we took delivery of 6 brand new bits of mobile mining equipment, courtesy of Q Global Commodities, courtesy of Bell. That is up there now. That has allowed us in the space of a month to double production, double the movement of volumes from that mine. We've now, and we are delivering that spodumene concentrate through to our offtaker now. First deliveries are actually taking place this week.
Jason, are you getting a recognition for your tantalum, or would that be later as a own process step?
That's later. A lot of that is associated in the fines, in those stockpiles. So we're doing the test work on that now.
So your current offtake doesn't include
Doesn't
tantalum.
include that there. And there's some very, very good tantalite associated with that. What we announced just 3 weeks ago, we've had a pilot plant facility here in Joburg, taking that spodumene and producing a lithium carbonate. Something we're very focused on, adding value. Not following my peers back in Australia in just producing a raw product. You know, actually adding value, producing an intermediate product such as lithium carbonate. We've produced lithium carbonate through the pilot plant facility here. It's being tested now. That process is being independently verified with a view that we will be looking to produce 1,000 tonne a year initially of lithium carbonate. And that lithium carbonate is going for what, $40,000 a tonne, roughly at the moment. So that's for a company of our size producing in a revenue base of about 40 million just purely on that is going to be something very significant for us.
Can I ask, because I think the smaller we are, the more junior we are, the more we are dependent on an ecosystem, existing infrastructure, old workings. When you say you had it tested in Joburg, is that an established facility like a Mintech? Or, I mean, because it must help to be able to deliver to somebody who already exists.
Yeah, no, we're doing it through, we've got a processing partner here called Southern Metals Processing. It's a guy called Gary Marks who's been doing a lot of work associated with that. Part of our next phase, as I've said, is to getting that independently verified.
Yeah. But
that,
so there is an ecosystem of people who can assist you doing this without you having to have the capital to do it yourself.
Absolutely, and that's one of the benefits of operating in something like South Africa. I've said so many things about South Africa. I'm a big proponent of it. You've got a first world mining infrastructure here. You've got services which, you know, many in Canada, many in Australia just do not have. You know, you've got an experienced labour force. You've got everything which can make mines happen. Okay? So look, Blesberg, that's going to be pushing ahead very quickly. Lithium exports, lithium sales taking place now. And lithium carbonate production to commence in September of this year. We've got our Kinusi copper mine, which is up in Tanzania. Tanzania, everybody here knows because of the gold, predominantly. Kinusi copper at surface, it's been mined by artisanals for about the past 10 years. The low-grade material, less than 10%, they're throwing away. The high-grade material runs between 30 and 50%. That's one of the samples we've taken from there. A fantastic opportunity. MSA were up there a couple of weeks back. Very excited about what we've done. We've got small-scale mining taking place now and a processing plant being designed and being built here in South Africa is going to be delivered up there in August to allow us to put first concentrates into the market in September. Again, a very fast-tracked development there. Finally, one of our graphite projects in Tanzania, Nyorinyori.
Go, come again? That sounds very Australian. Nyorinyori. I can't even pronounce it, man.
Yeah, no, have a drink.
You did well.
It'll come through quite good. Look, we've had MSA up there as well. They've looked at this, very excited, want to get involved in a bigger way. Almost 100, I can't say 100% total graphite content, but it is. Jumbo flakes, the size of your thumb. Our neighbours, a local Tanzanian company, just did their first export of a DSO product, no processing, straight out of the ground. They received $1,800 a tonne for that product. No process. You can imagine the cost profile up there.
Can I quickly put you the two questions I got from the audience around Blesberg, as we would say, or Blesberg?
Yep. Yes, sorry for my pronunciation.
No, it's cool. So the longer-term potential beyond the dumps, have you got a drilling program planned?
Yeah, they're meeting now.
So you are going to drill for...
We've got the drill pads preparation underway.
And then the second question was about what are the environmental issues of processing lithium in Gauteng? I think we're all like, you did it in Gauteng. Did you bump into any environmental issues at all?
No, we haven't run into any problems whatsoever.
Thank you. Please proceed.
So, no, it's been very, very positive there. We've got samples from the Nyorinyori going through STS at the moment. That's a very high-grade product, and like I say, almost a DSO product, which our neighbours are already exporting out through Dar es Salaam. 3 projects, all with scale and potential. Kinusi, we've got 10 granted mining licenses there. Allows us to move forward very quickly. On one of the licenses alone, you've got 750 metres of strike and something like 30 small-scale pits being mined. It's a tremendous project, and one which, with drilling, which is to commence in July, we'll be able to prove up a very significant copper project there, I believe. I think that's pretty much it, Bernard. I don't think I've got much else to say. It's a great story. Follow us, particularly when we list here on the JSE, because I think you'll see a company that's going to move forward very, very quickly. We are dynamic. We've almost taken that Aussie Junior model, brought it over here to Nairobi, which in itself is quite an interesting place to have an operating office, but great to get around. Unfortunately, when SAA collapsed, there was no other place better to be than in Nairobi to move around. Great team we've got up there, and we're very busy building our business.
Excellent. Thank you very much. So, ladies and gentlemen, 2 profound statements. The Aussie model brought to African opportunities. Another statement Jason made was, like, if the South African neglected, abandoned mines were in Australia, a fair number of them would have been reworked. And I think, again, that's a fantastic challenge for us, an opportunity. Just quickly remind us, I was looking for it because I do follow you on Twitter, so I know exactly of every piece of rock you ever pick up. I last year told everybody to follow you on Twitter, and I know
Please do.
I know 3 more people joined, so my whole following joined you.
Okay.
What is your Twitter handle?
Faith, where are you? J. Brewer Africa Mining, I think it is.
J. Brewer.
Yeah.
J. Brewer. I looked under Jason's, but it's clearly a very common name.
That's my sport. I've got a separate one which follows all the sport. So
no.
You'll
That's
excuse
okay.
me for that.
We don't follow Aussies when it comes to sport. We beat them. I mean, we play against them.
I've got an English passport, so passport of convenience. Come on.
Okay. So thank you for those questions. So if you list on the JSE, I can convince my 17-year-old son to put his pocket money in it. But for what? For graphite? For lithium? We like the story. What would be the key ingredient?
Look, unashamedly, we're not a single project company. My own experience in the past is if you have your eggs in one basket or in one jurisdiction, you're going to struggle. You're going to struggle. We've purposely built a portfolio of projects in proven mining districts. Let's be fair there, and where we can actually develop them. So what you're investing in is a junior company that's able to take a project into production within 6 to 12 months. That's able to secure funding that's non-dilutive. Okay, we're fully funded going forward. When we come to the JSE, again, sorry, Patricia, we're not raising capital. We've got the big balance sheet of Q Global Commodities behind us that are assisting us through their relationships with commodity groups in the UK, in Switzerland, through their relationships with Bell and so on, to bring in capital equipment to allow us to develop these projects. So you're supporting a company that isn't going to be sitting there earning big salaries, sitting in air-conditioned offices in Sydney, Perth, Vancouver, London. We're actually out there on the ground getting things done. We picked up Kinusi in February. We're going to be producing from there, sales of first exports in September. That's what you're backing, a team that can actually deliver.
I must say, what I think about differently than even 2 days ago, starting with yesterday's presentation, is this: start smaller, quick cash flow, get to cash flow. I mean, your model is perfect for that. You will drill, but you're already picking through the waste dumps to make revenue.
Yeah. It's proof of concept. Show the market, show the investors you can operate in these jurisdictions, because people still have question marks. The biggest challenge I faced in London was convincing people to back us in South Africa. I'm scratching my head with that. I really am. They're quite happy to go and put money into the Congo, into godforsaken places in South America. You've got to look at what we've got, play to the strengths, and you've got that opportunity here for sure.
Yeah, as Aussies go, not too bad a sample of them. Huh? Jason, welcome back. Thank you very much.
Thank you, John. Thank you.
I once infamously said Mark Cutifani is my second favorite Australian, because I've got a brother-in-law that's Australian, and I've never lived that down. So you are playing for position 3, okay? My third favorite Australian. I mean, George, Premier African Minerals. You must walk much faster, otherwise your time's up. I'm worried about it. Are you waiting for? Are we starting with? Are you ready?
I'm ready. He's not ready.
Are you playing a video? Thank you. Please.
Thank you. When I stand here and I think to myself that in September last year, I was standing in the bush. Today, it's a plant. It's a substantial plant that's going to produce substantial amounts of spodumene and is going to generate substantial amounts of revenue. And it's come in 6 months. You're not supposed to do things like this in the mining industry these days. I don't know whether I should be terrified of this or proud of this or quite which way I should think about it. I just know that the number of people, this huge number of people who've contributed so much to turning this piece of bush into that plant and this mine, they all deserve to be lauded. And really, it's a statement for the community, a statement for everybody, a statement for the country, and a statement for the company too. So, guys, as I stand here today, and I'm not quite sure which one's going to move this on. Oh, there we go. I remain unsure as to whether I should be terrified of it or proud of it. Without really trying to be funny, it's an accomplishment that I think is outstanding, and it's a tribute to everybody who was involved in it, from the design in the early stages through to the prepayment, through to the people in Zimbabwe and so on. Just a quick background on Premier African Minerals. We're London AIM listed. We have projects primarily in the SADC region, although we have interests in a project in Ethiopia still. We've had interests in other parts of West Africa, but primarily today Zimbabwe. We have a couple of projects in Zimbabwe. Zulu Lithium would be the second mine that we have built. We have an interest in the manganese operation in Namibia as well. We have some other exploration licenses in Mozambique, some others in Zimbabwe and elsewhere as well. So our key projects primarily are Zulu, our RHA tungsten operation that we'll bring back into operation, Ochizondu manganese in Namibia. Who we are, just ever so quickly, we don't really need to go into too much on this. The only thing I want to dwell on is the fact that our general manager in Zulu Lithium, Mr. Jabulani Shirasha, leads a team that is 100% Zimbabwean. There is not one single expat involved in that mine, not one. From the geologists through to the mining engineers, through to everybody. As I said, we're listed on London AIM. We've been an interesting company. We are sitting today with a market capitalization of about £185 million. So we've certainly moved up from where we were a matter of 3 or 4 years ago. In fact, I think we went from about £4.5 million up to about £185 million in very short order. And a lot of that is on the back of what we've been able to do with the Zulu Lithium project. I just want to dwell on this one here. We spoke about risk, and there's been a lot of talk about risk. And the junior mining sector is a very difficult one, and I found it over the years very difficult in many ways. It's fine to have a project. It's another thing to be able to finance it. The costs associated with going through a traditional route are inordinate. The costs of going through an entire detailed DFS, the normal validation processes, finding the finance, etc., etc., etc. We all know it. It becomes very, very difficult. So in the case of Zulu, we were faced with a unique set of circumstances. First of all, we had a deposit. We had a very good idea of what was there. We've had some excellent guidance and assistance from various different places in terms of the mineral assemblage within this deposit. And in these LCT pegmatites, that's probably one of the most important things. If you're not sitting with a mineral assemblage that can work and an ability to actually get a decent recovery, you're in trouble before you even start. So we had a very good understanding of that. There was incredible demand for the product. Spodumene prices were going through the roof, although I must say what gets reported and what's real are not necessarily the same kind of thing.
You're not quite getting those spot prices.
No, you don't get spot prices, but the contract prices are very good. And I was in a meeting this morning just on that one, and the spot price on the contract price on spodumene is probably running at around about $3,800 to $4,000 at the moment. And a lot of the contracts that are being done, I'm just going to dwell on this for a moment, a lot of the contracts that are being done are not necessarily being done on the straight sale of a spodumene contract. The longer and better term contracts are being done on profit share kind of thing related to the sale of hydroxide and so on. And those are the longer term kinds of deals that I think are going to be sustainable and will stand. And it is certainly where we are in terms of Prem and the Zulu project. So, as I was saying, some of these fundamentals were in place. There was this incredible demand. We knew where we were with the deposit. We were comfortable that we could adequately build something if we had the money to do it. And we set about trying to create an innovative process and flow sheet associated with this. We worked closely with a company called Stark Resources. I'll have a discount for that one from them, wherever they are. We worked very closely with them, and we came up with a process and a flow sheet that is a little different. I'll go into a bit more detail about it later.
And you've got exactly 2 minutes left for that. No, you see the timer.
The one that stopped.
No, the one that isn't stopping. The one that didn't stop whilst you played your corporate video. So
that was only 2 minutes. Okay.
So just
So
keep an eye on the time.
I'm gonna move on very, very quickly from this then. Let me just say that we felt that with the availability of money that was made available from an offtaker on the basis of a prepayment for purchase of concentrate, there was sufficient money made available for us to build the plant and develop the mine. It was as simple as that. And that agreement was put in place in the latter part of last year. I think the orders to build this plant only went in the latter part of last year. We started civils in December, January, in the middle of the wet season. I mean, that's how dramatic this was. A couple of photographs, I'm skipping through them. I don't think I need to go into market outlook. We know where we are on that. Geology, this presentation will be available. Again, I'm not going to dwell on the geology other than to say it's pretty classic LCT pegmatites. They're steeply dipping. There's a series of them. They are predominantly spodumene dominated. The mineral assemblage shows us around about 83% spodumene and 17% lepidolite. Our circuit, I'm moving on ever so quickly. I'm not going through that. It's available. Geology, it's there. Here we go. 83% spodumene, 17% lepidolite. There are tantalum byproducts. We will pick up those as well as we go. So just quickly in terms of the plant, as I said, it was a modular approach we took to the plant. The front-end crushers are large capacity but mobile. We then used a series of sorters. We put in XRT sorting to strip out waste material that is not pegmatite, although with hindsight, I must say the definition of the pegmatite ore body in mining is so distinct that my geologists keep on telling me even the mining engineers can deal with it.
I'll take that.
Yeah, okay. And then secondary sorting is UV, and this is the first time UV is going to be used in identifying higher grade spodumene areas within the pegmatite. The UV response is not to spodumene. The UV, can we switch that red thing off there?
No,
that thing that says time's up.
You're going to disappear through the floor in another minute.
Okay. So there's UV sorting to help upgrade. That's generally the flow sheet, ore preparation, sensor-based stockpile, dry milling and screening, desliming, mag sep, microflotation first to take out the lepidolites, spodumene flotation, concentrate handling.
Where is the UV in that step? Just quickly, sorry if you don't mind.
Yeah, I'll come on to, let me just go on to here, and there we
Okay.
go.
Yeah, thank you.
So in this, we've got primary sorting. The primary sorters are XRT. The secondary sorters are UV. Accepts go through to the milling circuit, etc., etc. Okay, so just ever so that's that one there. That's the plant. I've covered that in very quick detail.
So
I'm going to skip on.
The one question I
Sure.
want to put you from the audience is your production target. So by when are you producing how much?
We are already producing spodumene.
Yeah.
We're in a ramp up phase at the moment. I think it's going to take us another several months before we get to the targets. The preliminary target is 4,000 tonne a month of spodumene. We believe that that will extend in the early part of next year to approximately 6,000. The flow sheet is stockpiling -8 mil material separately, and we're looking to put in a separate flotation circuit to deal with that. So probably take it to 10,000 tonne a month of spodumene in fairly short order.
I'm throwing him off the stage. He wants to talk more. George,
I'd love
I really
to.
have to say on behalf of the audience, thank you for bringing quite an exciting story and a hell of a lot of personal excitement from you to the stage. So thank you very much. I have heard that the only Southern African country that will ever produce any inputs into the lithium chain is Zimbabwe. Then I've heard the most overhyped story in the lithium space is Zimbabwe. And yet today we had a proper presentation of somebody who's taken a very interesting concept. I mean, but there's a very clear theme developing, which I think if I was younger, had money or access to money, I would take quite a few lessons out of how people are going about doing these things. Huh? Very, very different approach. Mandy, Limpopo Strategic Minerals. Despite my best efforts, I couldn't get a presentation out of you. There is no special dispensation for you. You've got exactly 10 minutes. As you see, the floor open and you disappear. Welcome and thank you.
Thank you. Good morning, ladies and gentlemen, captains of the industries, and all honored guests. I am Mandy Malebe, CEO at Lethabo Exploration. So Lethabo is actually a common unisex name in the Setswana, Sepedi, and Sesotho languages. People tend to forget my name, and they end up calling me by the company name, Lethabo. But my name is Mandy. Lethabo started out as an exploration company. I think, let me do this real quick. Thanks. Okay. Lethabo started out as an exploration company, and we have since transitioned into mining as producers. Lethabo is 100% Black-owned, 100% South African-owned, and to date, we have been 100% self-funded, which means we have no external debt funding obligations. Lethabo is truly the first of its kind, with its director and executive body being local people born and bred in rural Limpopo in the district of Sekhukhune, and having mining rights for projects and greenfields in Sekhukhune. I think many of you here today, as well as those who are online, are familiar with the areas of Steelport, Begersfort, Leboagomo, Appel. That is Sekhukhune. That is home, and it's also home to our mining projects. Lethabo is affiliated, well, before I get to what we're affiliated to, I think I just need to mention real quick that being local people from Sekhukhune and mining in our home area, our commitment to the development that we want to see there is personal because of the background that we have, and also being exposed to the poverty there. Lethabo is affiliated to Minerals Council South Africa, where we have been a member since 2020, and where I serve as one of the deputy chairpersons of the Exploration and Junior Miners Leadership Forum on the Junior and Emerging Miners Desk, and where last week at the Minerals Council AGM, I was also appointed as a board member of the council. Lethabo is associated to the Johannesburg Stock Exchange, where we are participants in the current cohort on the Entrepreneurial Accelerator Program. On our end, our participation was sponsored by Minerals Council South Africa. This program is designed to grow the leader and to grow the business. So through means of accessing investors and capital, as well as including access to funding through the option of listing. This is essentially to increase our employment status as a nation, thus contributing to the economy. As Lethabo, the socio-economy which is within our immediate reach is that of Sekhukhune, Limpopo. Lethabo holds an executed mining right for iron ore, vanadium, chrome, platinum group metals, titanium, and andalusite on 3 farms respectively, 4 of these minerals being Limpopo strategic minerals. Our mining rights covers farms Malexkraal, farm Waterkop, and farm Mecklenburg. All these 3 farms are situated on the eastern limb of the Bushveld complex. For mining continuity, we have intentionally secured the mining rights on farm Waterkop and farm Mecklenburg because they are neighboring farms along the R37. While we secured the mining rights for iron and its byproducts on farm Malexkraal. The 3 farms together comprise of 8,370 hectares. As a self-funded company, from inception to date, our progress and project development has been dependent solely on the success of other non-mining related projects which we run and have used to provide capital. This is extremely difficult and challenging, especially because mining requires such high volumes of cash injection, not to mention the costs incurred to outsource expert opinion through consultants, geologists, and surveyors. Ours has been a long journey since 2007, when our first prospecting rights application was submitted to the DMRE, right up to this year when we finally executed our mining right. So that's after 16 years of being on the receiving end of bureaucracy, litigation, no access to funding, and limited access to markets. As an emerging mining company, being Black-owned and being women-led does not make us immune to the challenges which are common to the industry. Access to markets, access to capital, access to human capital, access to the DMRE's legitimate intervention at a regional level. We are too young of a company to even comment on access to rail issues. For the purpose of today's introduction to Lethabo Exploration, we are going to focus on one project, our iron ore project on farm Malexkraal. Of the 3 farms, this is the only site where we have done site establishment, completed the construction of a weighbridge, and began with open-cast mining operations. Implementing this project was the result of several debates where we were faced with the fact that potential buyers were resisting to commit to a project that had no existing operations, while on the other hand, we had no access to project funding for mining. So we resorted to the simple business principle of starting where you are with what you have. Again, our success in other businesses that we run funded this project. We currently have just over 41,000 tons of iron ore on the surface, 5,000 tons of which is crushed and screened to the specs that meet the requirements of our first offtake agreement. You know, sometimes mining is not as difficult as it comes across. We started where we were with what we had, injected a bit of money, okay, a lot of money, started mining, attracted the attention of buyers, and secured an offtake agreement. It has been a tough journey for Lethabo Exploration to realize our vision, regardless of the challenges which on many occasions posed a threat to sabotaging our progress. So, the iron ore project. On farm Malexkraal, the land is 1,484 hectares, located on the eastern limb of the Bushveld complex. That's approximately 60 kilometers northwest of Steelpoort. Access to the mine site occurs along a tarred road and then a gravel road made to access the mining site. Malexkraal has a healthy magnetite ore deposit comprising of iron and its byproducts such as titanium and vanadium. At Malexkraal, the main magnetite occurs within the magnetite heights. Historically, you'll see on the table, the sample there, historically 15 vertical boreholes were drilled on the property, and the results were from Begersfort Mintech Laboratory. And other samples that we took from the from the stockpiles, which are a result of the open cast mining that we've done, present results of iron at 52 to 66%. Funding is still required to carry out further studies on the longevity of the project. Lethabo is open to collaborating with other junior miners. We are open to supplying local mines who will carry out further processing on the ore for export, and certainly welcome follow-up discussions with investors and funders. You know, when it gets to discussing funding, we're always on our best behavior with the people who have the money bags. But it would certainly be in our favor for the funders to have funding requirements which are designed for emerging and junior miners, including junior exploration companies. While we understand that this is your money, junior and emerging miners, including junior exploration companies, cannot be benchmarked against the same standards and the same requirements which are set for major mining companies. The same applies to funders of black-owned exploration projects. And on that note, I thank you for your time.
Mandy, thank you very much. I'm sure after a few weeks, I'm going to reflect and say, so the presentation that surprised me the most was
Yeah.
Mandy's. And I'm wondering why, but I think, firstly, I wouldn't think of Steelpoort as a source of iron ore.
60 kilometers north.
Well, it's flippant close. It's that side of town. It's like where
Only
I'm
because
from,
it's you.
Steelpoort is
Only
that
because
side.
it's you.
Nobody else minds that in that area. So just to fill me in a little bit, so have you got an offtake agreement, and who accepts then the pain of trucking? Because it must be trucking from there to where. So just give us from your stockpile to the market, what happens there right now today? How does your ore get?
I have to be very strategic in answering this because our client is in the audience today. Trying to avoid eye contact.
Yes.
So the tracking, we've given that to our clients to deal with. We're too small of a mining company to take on that responsibility. Ours is to mine the ore and make it available.
And longer term? Because, I mean, again, this is where you are with what you have. You
That's
hand
it.
it over to others. Longer term, do you think you will solve for that differently?
I think if long term, if we reach the position where we are, we have the capacity to take that on, it will definitely also depend on, contributing factors to whether, such as prices and so forth, if we can afford it. But I don't want to commit to that and give our clients another impression. So I think until then, we're going to stick to leaving that to the buyers.
There's a question. Which of your strategic partners, and then in brackets, type of partners, not necessary names, can you mention today as part of your journey and moving forward? So you've grounded your storyline in a black woman owned is difficult, but you've got partners. I think the question is, which of those partners played a role in assisting you?
Well, to give a bit of background that I didn't include in this presentation.
And you don't have a lot of time to
Lethabo
include it now.
Exploration. I actually do this with my father and my brother. Lethabo Exploration, to this point, has been a family business. Hence, we've taken on, we put our money where our mouth is. In terms of our stakeholder engagements and our stakeholder ecosystem, I would definitely, I will name it, definitely give credit to Minerals Council. They've played a huge role in directing us to the right opportunities, such as the JSC. We've met with Patricia on several occasions, and the accelerator program, for example, that we're in. All of these programs, though external, contribute to building the business, contribute to building the leader of the business, the executive body, and that's where our growth is going to come from. So I'm not sure if that's answering the question that you've received.
Ladies, gentlemen, what a phenomenal, surprising story to me.
Thank
Mandy.
you. Thank you.
Thank you. We shall now call you Mandy Lethabo. Okay. See, we get half of it right. Where's this Peter Major? Be brief, brother, be brief, eh? And be kind. Can you be brief and kind? Peter Major.
I can't be both.
Not both, okay. Just be brief then.
Well, look, let's set up the facilities here. Oh, geez, you're way ahead of me, guys.
No, just get moving, man.
And I get, what, 5 minutes?
No, yeah.
All right, I'm going to take 6 minutes because I need 2 minutes to lay the groundwork and a minute per company.
Okay,
And I'll
cool.
make it up later.
Change the timer to 6 minutes, please.
Early stage mining companies. You better feel lucky if you're getting involved in these. Boris showed us what the percentages of success were. Far less than 1%. That takes more than luck. That takes heaven and angels. So out of the multitude of companies out there, which one is the good one? All of them look good, but we know there's a lot of bad, ugly ones out there. And we've seen from very good presentations, there's a lot of factors important in investing in these companies The biggest factors seem to be management. You can have an average ore body, but if you've got good management, they can see you through. Resource, maybe that's second. I think so. And location is very, very important. If you're trying to mine in Hades or heaven, big difference no matter who your management is. All the others, important as well. We've heard that a lot now. Time. That's what kills more investments than anything. We know that if someone promises you a return in 1 year of your money, doubled, you've made 100%. Fantastic investment. There's lots of offers out there. I'll double your money, but it takes 2 years. So you made 41. All you need is a DMR to lose your license or find something with it, and you're already up to 3 and 4 years. And everything else works as it's supposed to, but now you're making 19% on your money. And if you're in some countries like we seem to be headed, 19 is almost what you're going to pay for your money. Time leads to inflation, leads to currency depreciation in most countries, certainly in South Africa, and that's where we are now. Is there any future in South African mining companies? Okay, Anglo's, Billiton, they're a big part of our resource index. They're pretty international now. We've had eras where we made 10 times our money, but not overnight. 10, 15 years to make a 10-bagger. What's the chances of us getting even a 5-bagger now? South African Resource Index versus the biggest alternative on the planet, the S&P 500. Have we been lower? Yes. In the year 2000, when the whole world was coming to a halt. Remember? Planes were going to fall out of the air. Clocks were going to quit working, computers. But that's about how low we are now. So you got to ask yourself, do you feel lucky, punk? If something's lost 90%, what's to keep it from losing another 10%? On the other hand, you're getting something that's very close to what could be a bottom. So just be sure of the asset. If you're holding a real asset you still believe in, like Warren Buffett says, and it looks this cheap, you should be doubling up. Okay, we've heard a lot of presentations, lots of good figures. Our market's been decimated, our stock market, with mining shares. When I was investing here in the late 80s, early 90s for fund managers, 140 mining shares. And in the low 90s, they were all worth money. Our presentations, Premium Nickel Resources by Boris Kamstra. Oops. Well, Boris is doing one of my favorite investments, brownfields. To me, brownfields remove so much of the risks that come with greenfields. You know so much more about them, and you often get a lot of good infrastructure. We've spoken about teams. Anybody that knows Boris's history before BSE knew this is a guy that makes things happen to completion, and BSE is just more proof of that. Let's look at the share price. Maybe it listed around 4, got as high as 8. I don't know if that was relevant to when you went into BSE or before, but let's look at the last year or so. As Boris said, a few things have conspired against him. The asset's still there. The team is still there. The metal is still there. And we've heard very good presentations on future metal prices. And as a fund manager, I always looked at reversion to the mean, and the project had to be able to cover its costs and break even and get my money back at the lower quartile. So I think that's more important than where the metal price is today or where it could even be. Can this project get you your money back with a return that covers interest at a lower quartile? Boris didn't tell us what the breakdown was between nickel and copper, and I didn't have time to work that out. I have a hunch it's probably around 60-40, Boris. Either way, these two metals are very popular going forward. They have been, and they will be going forward. Cobalt, I know we produce a little out of this mine, but I don't think it's very much. It's a very radical performing metal. I think it's irrelevant to the project. That shows cyclicality of cobalt. That's why you just have to be a low-cost producer. Marula Mining.
So what is your conclusion? You lead us down this garden path of Boris is a great guy, so?
Okay, conclusion according to
Yes.
Warren Buffett is the day you buy and the price you pay is the most important. And the second most important is the day you sell and what you sell at.
I get that. Thank you. You see, I knew there was a pearl of wisdom for getting to be dropped. Move on. Thank you.
Marula. Okay, I put in zinc. This is out of another presentation, whereas Jason told us about copper, so that's great. Jason's presenting what looks like a mining house. In a mining house, whether it's Anglos or Billiton, you're pretty much buying for the team and the expertise and, as Jason pointed out, lower risk. You know, different products, different locales. And so that's what this looks like. Are you buying it for the graphite? Are you buying it for the copper? You're buying it for a team, and it's really important that he can deliver in 6 to 12 months. We haven't heard that on any of these other projects. So this is really lowering the risks, especially when we factor in the time. If you're getting your money back in 6 months, 12 months, 18 months, instead of 3 years, 5 years, 8 years. Those are all good products. It sounds like the ore resources are very good. And we know Jason moves fast, and he moves with people that get things done. It's hard to compare him with Boris. You know, it could be a 15-rounder you put those two in. But Premier African Minerals. Or do you want me to recommend that too? Real quickly. Marula share price. It's very short term to derive too much from this. You're going to have to do a little bit of work, audience. Sorry. You're going to have to figure out probably one of these projects coming to fruition is going to double the share price.
Yeah.
Time's up. Oh, gee, okay. African Premier Minerals. We're talking about lithium. Somebody that knows what they're doing. They're building their second mine in Zimbabwe. We know Zimbabwe is the African capital. I think it's the third biggest producer of lithium in the world now. It's hard to say, it's just hype. And, Helium, Lethabo. Same questions apply. Who's the team? When does the money come in? How much do we need to invest to get how much back? Thank you.
Thank you, Peter. So that was the short version, the polite version of Peter Major. I'm not sure he's useful anymore. I mean, if it's going to become like that, I don't know. We'll get somebody else next time. Peter, thank you. What we've done with Peter over the years and continue to do is to almost just capture the presentation. As you can see, he actually prepares a little bit, I think, and he puts it in the context of history. What are the drivers? So very, very useful. Thank you very much.